Support and resistance, probably the easiest way to trade. You'll probably stop out more times than you like, but the upside or the gains are far more consistent. So quite typically a support and resistance trade, obviously where a price struggles to make new highs is known as resistance, and where a price seems to find buyers is known as support. And here we can see 1, 2, 3, 4, 5, call it 5 or 6 areas of support on this chart specifically, and let's call it 3 areas of resistance on this price. So again, we've got 2 typical trades here that we can trade. If you had gone short on the resistance over here, you would have typically maybe shorted one of these 2 candles. There's one of those gaps I was telling you about. If you were short, you wouldn't mind a gap because you're far more in the money than you were the day before, and you can trade all the way to the support line and take profit. Now, where would you have placed your stop? Very easily, a break similar to this candle. You would have placed your stop loss well outside that resistance line if you were short, and buy your short back if the trade went against you over here. And then you get the other trader, which is the break trader, who would not be buying in this area. He'd be waiting for a break of the support level. So these 2 candles over here don't signal a break just yet because they managed to close more or less on that line of support. Your first hint was this candlestick over here, where you might have gone short. This one definitely confirms it. Now, this is exactly what I was talking about earlier. You would have gone short over here. You would have had a target somewhere down here, and you would have placed your, if you had placed your stop on that support line, which now becomes resistance, you would have been stopped out, and you had gone short again, you would have been stopped out again. So make sure that when you trade support and resistance, you actually get a break and a confirmation. Now, a nice little trick to this, is which I like to use myself, is I like to use closing price stops. So let's say my stop loss was over here at 45 Rand 90. The fact that, and I was going short, and the fact that this price traded through 45 Rand 90 3 times or 4 times would not have concerned me. What would have concerned me is a closing price above 45 Rand 90. So I would have looked at this price and said, look, if it's closed at 46 Rand or 46 Rand 10, it means that support is now held and back in place. I would have then stopped out of this trade. So a closing stop is also quite a nice strategy, because then you don't stop out for no reason. The problem though with closing stops is tomorrow morning you might find yourself stuck in a gap, which I spoke about earlier. Here's another most common support and resistance, because they're not always horizontal or parallel. Here's a nice trending support and resistance. Here's your resistance line, and there's your supporting bottoms. Now these patterns are quite nice to trade until they change. So what you'd be looking for here is every test of resistance you'd be looking to go short or take profit if you were long. Now, how do you trade this with a stop loss? Marked on this chart are the areas of support. So not all of them are on this support line, but most of them are. So I typically would not be getting in over here, but I definitely, on the bounces, I'd be going short because the trend is down. So these would be my take profit levels unless the trade breaks out of this trend. You could have shorted this kind of pattern every single time it tests the top. And looking at a lot of the stocks on the J200 at the moment, there's quite a few retailers that are looking at similar patterns, and Kumba is actually one of the big ones that's had a multi-year pattern like this. So you could have typically shorted every single bounce on that kind of stock, taken profit. But as you can see, any break of this resistance line would have stopped you out. There's no need for you to ride a stop past that, because you can see the broader trend is down. So this would be a great short trade every single time. Take profit, wait for the bounce, get short. Take profit, wait for the bounce, get short. And placing a stop loss, as you can see on a downward trend, is always going to be lower. So if your first stop loss was up here at 23, by the time you've traded this 3 or 4 times, your next stop loss is only going to be at 19.5 or 20, but you can still ride this trend all the way down until it changes. Once you've hit your stop loss, you'll probably find it's time to go long and that the trend has changed, and then everything changes again. Here we have an upward trend. So I've marked on this chart here your buy zones. Okay, here is a nice example of where you would have stopped out on an upward trend. So we would have probably bought it around here somewhere, and the very next day it closed below the upward trend. We would have triggered our stop loss. Now we wouldn't have climbed back in again, and we would have probably missed all of this upside. But then we get a retest of this trend line where you look for, does it get support here? Yes, it does. We would have gotten in somewhere in between this candle and this candle. I would have probably gotten in halfway through here, because this has showed me that it's closed above the support line. Remember, this is a closing price. So we could have ridden this. We probably would have missed a greedy target. Conservatively, we could have still made money, but even if we didn't bank it, we could have ridden this trade all the way up to the ultimate goal. In this trade, particularly Aussie dollar, US dollar, at that stage had a 1-to-3 risk to reward ratio. But as you can see, just because intraday price action breaches your support line, not once did this currency pair close below the support line. So it's very, very easy for you to place your stop outside the support line, wait for it to close there, get your confirmation, and you're out. So trading patterns is a very nice way and a visual way to place your stops.